Okay, cool. All right, so yeah, guys, this is not gonna be long. First of all, just wanted to show you guys the that price action strategy that I spoke about today, and that strategy actually is the first. That's the first strategy that I would have started to use when I would have started trading. So I've actually made. Let me just go ahead and mute everyone here real quick. Okay, cool. Yeah, so that is actually pretty much the first strategy that I would have started to use when I first started trading. I used that even before I started to use the moving averages and so on. That was actually what I was using. Uh, Give me 1 second. Let me just go ahead and add. Just go ahead and add this guy here. Okay, cool. Right. So where was I? Okay, so I was saying this is actually the first strategy that I was using before I started to use the moving averages, and I made quite a lot of money using it. So let me just show you guys how it works. Now I've always used it with the H1 time frame. All right, I know right now we work a lot with the 4 hour and the 15 minute correlation, which works really good. But let me just show you guys how this movement, this price action movement that I used before actually kicks in. All right. I know a lot of folks as well said that they never really use trend lines. So I'm actually going to cover that as well. And by the way, guys, I mute your mics, but if you want, it's set that you can unmute them at any point in time when you're ready. All right. So just if there's a question that you may have, just feel free to unmute yourself and ask me. So actually, before I get into the strategy itself, let me just touch on the trend lines for those folks who would have mentioned that they never really used them. Trend line strategy is pretty nice. It's pretty simple and straightforward. And what I find that it does, it gives you a much better um, analysis. To me, even when you combine the trend line strategy with the moving averages, to me is a bit more accurate as well. You don't necessarily have to because the moving averages give you a pretty good idea. But what I find is when it comes to dips and drops and so on, sometimes you get the trend line showing you a much better picture of what could potentially happen. Let me see if I've already got anything drawn up. Uh, Okay. Well, this is one that I was looking at a little earlier. This is Euro CHF, and you can pretty much do this with any pair, to be quite honest. But what you want to look for when you're using trend lines is, again, those support resistance areas. You've got those, but this is the only time that you would find that you may use wicks of candles and so on. Apart from trend lines, I don't use wicks or pay attention to wicks much at all. Okay. So this particular one that I was looking at, if you look at this chart here, I know earlier today, for those of you guys in James' chat, he was talking about the strategy. It's only after I really started to look at it, I realized that it was already something that I was doing before. Um, so it wasn't really that much different. So here's what you're looking for. In this scenario, you see here, this is a major uptrend here. If you're combining the moving averages with the trend lines, you see here what I did was mark out those points. Now, most persons they know of support resistance as just the horizontal lines, which is like what you would have here, these purple lines. Or I could come here and if but this is consolidation there. But let's say I look around here, and I could consider this right up here, this section here, as support. Why? Because you're looking for where the bounces happen. Okay, you got some bounce in here, some consolidation across. It goes back up and comes back down. You got a wick that touches there again, back up, and just in this general area. So this could be a support area. Most persons are familiar only with the horizontal supports. Okay, now let me just take those off and show you with the trend lines. You come over here, you get your trend line. Um, Icon, all right? And what you're looking for is those slanted movements. If you look here, this is one right here, okay? You could use that, okay? If you come again And I'm going to show you how you can actually combine that with the moving averages. Actually, it's pretty powerful. So you're looking for these movements here. Now, if I were to come, let's say, here, okay, just to show you something. Now, obviously, if I were to bring this on a lower time frame, oh, this is the 5 minute. Okay, it doesn't really matter. We can work with the 5 minute. Normally, I wouldn't do this on 5 minute, but it really doesn't matter for the sake of this example. We're just looking at the principle of how the trend lines are used. Okay, so here it is. You got the bounce here, you got the bounce here, and then you got a third bounce. Now, I heard it said this way: 1, 2, run it through. I thought that always was catchy. All right, you get 2 hits, 1, 2, you run it through. Okay, you see the formation happening here. 1, 2. So if you got, say, a W, boom, 1, 2, third leg, and you realize that the third leg actually falls on this trend line as well. Okay, now here's the interesting thing: if you're combining with the MAs, if you look at this, you've got the trend line movement, but at the same time, then you've got the cross that happens 14 above 50. Okay, if you see that and you see the two of these combined, 14 above 50, along with the trend line strategy, okay, you've already got the 200 moving average below, so it tells you that you've got that support, which means that this is likely an upward trend. Okay, that's very, very important. You always want to stick with the trend. So you've got this upward trend, upward movement is clear here, but the 200 kind of confirms that for you. You've got your trend line going down, and then you've got the cross right after that. What you could then do once you see that happening, okay, 14 above 50, you can take a buy position from there all the way up. Okay, now if you notice where this happens, where this trend line crosses here, it actually kind of gives you an idea as to where your first retracement kicks in. Because look at it, 1, 2, run it through, you come right up, and what happens? Boom, the wick touches it, and it retraces back. Okay, don't forget, you're always going to get those retracements. They can be scary sometimes, but don't worry about it. That's just part of it. All right, it touches there, your trend line, it retraces, and then it keeps pushing up. And you know it's going to push up because you still got the 200 below, you still got the 14, still got the 50, and they're just above that 14 moving average. They're not too far off. They push right up. Okay, you take that, you run it right up. If you bought in anywhere after the cross, that's a cool, about 50, 57 pips or so, just about. Okay, comes back to the 14 moving average. All right, dips, goes back up. So really and truly, if you stayed in this trade, you move your stop loss up behind it. Okay, you could have easily bagged 50, 56 pips easily. All right, even if it came back down here and it hit your stop loss, that's all right. You would have had a pretty good amount of pips nonetheless. All right, obviously we've got this consolidation here because right now we are in the Tokyo period. All right, so that's one example of the trend lines. Let's look at some more. All right, again, from the time I look at this, let me just come over here. Let me switch that one. Let me come to the H1. Let's look for some setups. Yeah, trend lines are really, really cool. See this? 1, 2, 3, 4. Okay, this, another trend line. You could have drawn a trend line here if you needed to. There's trend line and there's trend line channels. Okay, let me tell you the difference. Okay, now trend line, easy to identify. You're looking, you want to figure out where this thing going to bounce to. All right, you see a lot of movement happening here. Okay, boom, 1, 2, 3. Okay, if you notice in each of these scenarios, when it bounced, okay, came up, came down to your trend line, or just about, just stayed up just a little bit. Okay, came down. Okay, ran along the trend line, bounced up, came back down to your trend line. You notice that it breaks the trend line, but look at what happens here. Even though it breaks the trend line, it doesn't close below the trend line, one, and only the wick of the candle closes below the trend line. Okay, but even though this is not your traditional horizontal support, this still acts as a support level, because if it's an uptrend, then you're going to get that slanting in an upward direction for upward movement. So you've got all these bounces here, and it gives you a pretty good idea as to how far down this thing might come. Okay, and if you realize it runs all the way up here, look at this, beautiful. Got hits here, All right, you got hit here. And here's a really, really important thing to keep in mind as well. You know, when you're looking at your trend lines and you're seeing this kind of movement, what you want to do is you want to trade the bounces. Okay. Oops, didn't mean to move that. You want to trade the bounces off your trend line. So what does that mean? Now, if you see this is happening, hits and it bounces off. All right. Come again, it hits, it bounces off. Every time that it comes down here, this is actually a new entry for you. Came down because look at this movement. Think of it this way: if you've got a movement coming in a direction, okay, and then all of a sudden, it just changes direction. It means that whatever was strong enough to stop that movement in its tracks is a pretty important point. All right, it's got to be important if it's able to stop a movement because check this out: from here straight down is about 60 pips, right? All red candles, red, 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 all red. And then just like that, boom, it bounces. So it tells you that if this area, if this zone is strong enough to immediately stop a solid movement of all bearish candles, this is the important point. All right, even before, because this wouldn't have been formed as yet. It wouldn't have been formed as yet, but you can pay attention to this. Now check what happens. Another reason that you know you can pay attention to this because look at the area. You've got some red candles here come down, and then it bounced off. It also bounced off of the 14, okay? But this area, this zone, is a very important point, and it comes right back down in that same zone here again. So you did that. If you rolled that right up, that's 155 pips. Now, even if you use a small stop loss, so let's say, okay, you came here. So what you do, you look to the left, okay? So why would you look to the left? Because you now want to find out where was the previous point of importance before this section. Now, nothing in here matters because look, this is all blank space. So you come all the way to here. So the last point of interest was around here. So you can actually come, if you were here, you would have bought in here. Your stop loss could be right here. All right. So your risk is about, if you bought in here, your risk is about 27 pips. Not even 27, about 21 pips or so. So your risk is 21 pips. Your potential, because even if this comes back, look at this candle here, if it comes back, it comes close, but it doesn't actually come back to your entry point. You just keep writing it up, writing it up. Now, this wick right here is your first indication that this is about to change direction. Because once you see the wicks are price exhaustion. It starts to tell you, well, hey, you know what? The sellers now are trying to push this back down. You're seeing a lot of wicks going up here, but ultimately, check it. It goes up, comes back to the 14, back up, back to the 14. Does it break the 14? No, it doesn't. It just bounces off of it, pushes back up. But then you get this big wick. Now that right there, pay attention to it. Okay? And as that happens, look what happens here. It comes right back down, goes up, it closes here, and then the very next candle is a red candle. It comes to here and stops right there. Second one opens and it starts to come down again. From the time you see it looking to break your 14, you're closing. As a matter of fact, you could have even closed on this candle here. You would have had 136 pips. Even if you closed on the ending of this red candle here, that's still 97 pips, 95 pips. All right? Your risk was 21. Your profit, even if you close here right on the 14, was 94 pips. All right? Now, moving from that, we see that happens. It breaks your 14. It breaks your 50. So remember, we look at the moving averages, and normally, if you're only using the moving averages strategy, the rule generally is if it breaks the 14, it's going to retrace back down to the 50. And if it breaks the 50, it's possible to retrace to the 200. This is the strategy that most persons use. The strategy that I use is you combine that with trend line, because here's why. If I was working based solely on moving averages, and I said, well, okay, it's going to hit the 50 and retrace, guess what? I would have been wrong, because it came down with another 35 pips. All of that is drawdown. You see what I'm saying? Now, if I use the strategy that I currently do use, which is MAs plus trend line strategy, check this out. It comes down to the trend line. It cracks the trend line. So I wouldn't have bought in as yet because what is an upward trend. Okay. So I'm not even looking to buy on the downs because obviously if it's an upward movement, it could come and it might have hit the 14 and bounce back up. It might have hit the 50 and bounce back up. But if it is an uptrend, my thing is wait for it to come to the lowest point that is most likely to come to, and then I'm looking to put in a buy. So check this out. It comes back down, passes the 14, passes the 50, it comes down to the trend, and then what? It breaks it by what? 7 pips, retraces and closes above my trend line. Now the 200 is above. Check this out. So if I was going again on a moving averages strategy only, guess what? 200 is above, 14 is above, 50 is above. Someone might have said, well, okay, boom, we got a major movement here. We got the 50 above, the 14 above, and the 200 above. This is going to push all the way down. And everybody would have been in this trade looking to go into a sell. And I would have been here like, no, because I'm waiting for it to come down to the trend line. Now, if it cracks the trend line and closes below my trend line, then I'm looking at that and saying, well, okay, maybe this will be a sell indeed. What would happen is it might come down, all right, come down to about here, all right, which would have been the zone of support before. So it's going to come down to about here, and then from here, let me just, man, I hate that I can't actually draw on this the way I would like to. But nonetheless, it would have come down to about here, retrace back to the trend line, and then if it closed below, so we've had a movement down here, back to here, and then it would have shot down. Okay? That is highly likely what would have happened. So check what happened here with a trend. Trend line, candle, cracked it, closed above it. And at the close of this sell candle is when I would have placed my buy. All right? 2 reasons. 1, the trend line is acting as my support. And 2, the wick tells me that it wants to push back up. Does everybody get that so far? So I would have bought in on the close of this sell candle and entered right here. Again, this is a second entry that I would have had. Okay, I would have closed my first one already, taken that profit, 93 pips. Open the second one. Write it from there up. 86 pips. Same pair. Same pair. 86 pips up. Even if I closed it when it came here, this candle came and closed below it. At this point, I would have said, you know what? You're okay, so you're not bouncing off the 14. You're dropping below. Close. So guess what? I just bagged another 54, 55 pips. All right? What happens? It comes down again. Boom. Trend line, trend line, trend line. Consolidation here. And then guess what? The wicks show me it wants to push up. Another entry. Entry number 3. Again, where would my stop loss be? I look to the left. Blank space. Doesn't matter. So I come here. Last area of support right here. So you see that now before our support was, let me just go ahead and get this. Our support was here. Now our support is at this point. Okay? So how much are we risking there on that level? Okay, so that we're risking about 32 pips. Okay, fine. What is our profit potential? You wrote it right back up, breaks the 14 and closes above it. That's a sign it's going to keep going up. Retraces, back up. Comes back down, doesn't close or break the 14. It keeps going. All right? Keeps going. Now at this stage, you're moving your stop loss up as well. It goes right up. Boom, 14. Doesn't break it, goes back up. All the way up here until when? Right here. Candles come back down. Not yet, because it could have bounced and kept going. It didn't. Third candle came down. It broke it. It closed below it. Even if you got in right here, when it closed, that's 110 pips. If you decided you want to close right here, that's fine. That's 143 pips. So we got 143. We already got 54 from over here, and we had 86 from over here. All right. So what's happening? Check this out. Comes back down. Now this time it doesn't break the 50. So here's the interesting thing. Now most likely we're not gonna We're not going to hold it while it comes all the way down here. I know it doesn't come back to the trend line, but obviously if you're here and you've got this kind of movement, 100 and yeah, comes out on it closes there, 134. You don't want to lose that much. I mean, back down to 64. All right, you don't want to do that because yes, it goes back up, but all this is money. You don't want to give back all that money, so you closed out and you wait. Comes here, it doesn't hit the trend line, it hits the 50. Yes, even though you could have made some money here, yeah, that's true. You could have, but if you want to be safe, I mean, another 84 pips, fine. But if you want to be safe, just wait. Just wait. Still on the same trend line strategy, guys. Comes back down, comes into the trend line area zone, right? Boom, it's going to come here. It's not breaking it. And history shows, just zoom out a little bit, history has shown so far it's not breaking it. So, you just kind of sticking with that until it tells you different. All right? So look, comes back down again, another entry. Write that up, 98 pips. All right? It closes only when it gets here. So you still get up with like 69, call it 70 pips. Consolidates again, another entry. This is about what, the fifth entry? And every time that you're doing that, guys, check this out. So this was a stop loss zone. This was a stop loss zone. This one didn't come right down. So obviously, you don't work with that. It came here. It didn't exactly touch it, but it came close enough. Okay. And you could have kept your stop loss zone there. Or if you're moving with a principal amount, you could have kept, 20 pips, 15, 20 pips or so. And, that could have been a stop loss zone. When you move from here again, this could have been, so the previous low is your stop loss zone. So you're never losing profit. And every time you're just bagging profits. Bag, bag, bag. From over here, money. Into here again, rode it up, came back down, all right, jumped out, waited for it to come back to trend line, entry again, money again, came back down, money again, and you roll this one up. Check this out. Came back down, you wick off of the trend line, not off of the MAs, because check it out again. This red candle closed below the 50. You feel me? So if you're only using a moving average strategy and it closed below the 40 and closed below the 50, you might have again said, like a lot of people, okay, well, according to moving average strategy system, this is going to go down because it closed below. And it's going to come right down to the 200, which is not the case of what happened. If you use this strategy, use my strategy, check it out. It came to the trend line though, and you roll that all the way up. It's 255 pips. Any questions so far? Let me just kind of stick a pin and pause for a bit. Any questions on anything that I just showed you guys so far?
I mean, it makes a lot of sense, but like most of the pairs don't run like that. Like, how do we spot a pair that is gonna run like that, and how do you know like it's gonna go so far up? A lot of the pairs, like, at least from my experience, they go up, but then soon they just turn around and tank.
Okay,
I mean,
is it any
it's
pair you
hard
want
to
us to look at?
that just go straight like that.
Okay, let's choose a different pair. Any particular pair you want me to look at? And I'm going to show
Like,
that this.
look at GJ.
Okay, let's look at GJ. Infamous GJ. GJ and UJ. Crazy pairs. Okay, so here we go. Same H1 trend line strategy. All right, so we already, I mean, right here. Boom. Okay, we zoom in a bit. So we got it here again. Bounce, bounce, bounce. Broke the 14, broke the 50, bounce. Okay, it's an uptrend, so we buy it. Oh, let me come a little closer in. Okay, okay, so we got a major movement here. We got a drop. Boom, about 60 pips down. Hits the trend line. Okay, hits the trend line, and from there is a movement right up. Boom, we wait for it to close there. We still would have bagged about, closes below right here, 38 pips. Okay, 38 pips right there. Wait for it to drop again. It drops, touches the trend line. What do? You wait for the next candle. Okay,
But at that point in time, let's say with that second drop, you wouldn't know that is a trend until that second drop happened.
correct.
From the beginning, you just assume that it's going to continue because it kind of bounced from the 200. So at that second drop, that's when, okay, I can ride the trend line here, and then you start falling from that point, right?
Yep. So we got one, we got two, we got three, we got four. Oops.
But let's say like right now, this is already passed, already missed it. So what would you start to fall in there for now, like from the point of the stage right now?
I just said, but I mean, if I was drawing it, well, that was drawn for that particular area. Okay, but if you were
So
looking at it right now,
basically right now, you're looking for the sell off until it hits the trend line, and then you won't take a position until probably hit the trend line, right?
correct. Correct. Because what the trend line does, again, the trend line acts like that support that you're looking for. All right. Even with this major drop right here, I don't know what is it happened that caused a drop like that, but that was huge. Um, but even with that, it just barely breaks it, and it just falls right back into the into in line and just keeps going, keeps going. So what I'm saying is, if you're using the trend line strategy and you observe these kind of bounces, and I normally like to see at least three bounces. So what you're saying is correct. You want to see at least three bounces. It's going to hit it first, it's going to retest it, and then our third bounce is generally confirmation that you really want to pay some attention. There's actually even a channel that is here. So I mean, if you look at, oops, that's not what I wanted. I want this. So even if you look here, all right, and there's some instances where you actually draw through the wicks and so on, because if you got a solid trend movement, sometimes you might get a wick that might break through the trend line. But again, I don't really count wicks as that important, right? But they do play a part sometimes. So even if you look at this, you've got kind of a wedge here going up, and check the bounces that's happening. All right, I could even bring this through here slightly. You get just a tip movement above, but everything is happening within this channel right here. Everything, even the break right there. I take this again, and let's see.
So I guess you can look
So much move.
move to the right because I guess you can look for a touch on the upper channel too, right?
I didn't hear that. Say that again.
Like you can move all the way to the right.
Okay. Yeah. This is to the very right. This is right.
Oh, okay. Okay, so I guess so right now it's kind of like breaking that channel, but if it moves up and hits that channel, you can look for a sell from that channel, right?
Correct, because even though it went up here, I mean this is in the area here now of true resistance. So the fact that you get this consolidation going on right here, it tells you that it's not really looking to push much past that. Actually, not even use that. Let me use this right here. And if I were to zoom out, okay, see how high that is? So you're in an area right now that hasn't even been tested for a while. So it's not enough energy to push that any further up, which is why you've got this consolidation and you've got the wicks. So the channel, all right, it breaks the trend line, it comes below, and that's why you're starting to see this movement now happening below. Another thing, remember recently, Roger, when we did we had our session, and I told you that whenever you see the candle starting to ride on the 14 moving average like this, almost all the time that happens, it's going to break it and drop below. Because what you ultimately want to be looking for is some movement just above. Just above. Like in a case like this, okay, you got it was here, it's riding it. It doesn't always break it, but in most cases it does. Look at this. Right, fall below, up, and check this out. It's not really pushing far off. And I would not be surprised because it's not reached this level, it's gonna bounce. You always want to trade the bounces. Anytime that you see that you're hitting a resistance zone or a support zone, and you've got some consolidation around that area, it is very, very likely or highly likely that you're going to see a bounce in the opposite direction. Especially when you've got confirmation of a trend line passing through it like this. Goes up, breaks trend line, comes back down, and you're at that resistance point. This is going to start to drop. Now, here's the thing. You will get that drop. You might get it to the 14. All right. Nothing tells me that it's going to drop to the 200 because if I look back to the history, is not touched that 200 at all. All right, for a while. So it's most likely going to drop to the 14 to the 50, probably break the 50 for a bit. Okay, and then it's gonna retrace back up. How far down? I will be looking anywhere in this zone. Why? One, two, run it through.
Another trend line that just came up.
Correct, and it creates somewhat of a bearish wedge, bearish flag pattern here as well. So those are the things that you want to look for. All right, moving averages would say, hey, we know it's gonna come to the 50, but what happens sometimes is it breaks it so much. That's what happened with UJ the other day with the guys, and that's the same thing that happened with CAD as well, because everyone is saying, okay, it's just gonna go from this moving average to that moving average. That was not the case. It smashed them. I didn't draw any trend lines back on that one, but I'm pretty sure if someone did, they would have seen that something was off. You know, outside of the times that you have those, the news and so on. All right, but yeah, this here tells me right here that this is going to drop and it's probably going to come around, touch this trend line here before making a move back up. Why? Because that's what history shows. 1, 2. All right. All right. Okay. Let's see. We got this. Here's another. Here's another scenario. All right. Broke this. And check this out. So you broke that, and you've got the cross. I'm always looking for those crosses. So I've got a support area here. All right. So boom, that's one. Got the support. I see the movement down. Trend line crosses. Got another support level just around here. I'm not paying. Let me bring it down. I'm not paying too much attention to those wicks though. But any movement, the same way that person's looking and say, well, hey, any movement in an upward direction that is directly up, it cannot maintain that position for too long. Same thing on the flip side. All right, if it's coming down, once you see that it pushes off of the MA way off, you're gonna hit that true resistance or true support area. If I zoom out, you see all of this? Boom. Right in the area here where these start to exhaust, I think all of those are just wicks. Yep, for the most part. Big ass wick right here, another wick right here, and then some consolidation right here. So this is support area, and as you see, we go right across, and it's just in the same area as over here again. All right, see that? And how do I know that the reason this comes down here, even though if you were just looking at this section here, you would have not have known that. So the question is, what makes this come this far down? Well, remember I talked about the blank space. Blank space right there. So I go right back to see where was the actual area that there wasn't a blank space. Here it is. So I know that this zone, all right, we got support, and then we got the support zone. So I know in this area is where I'm going to see a bounce. And so said, so done. As much as that bounce, as that came down, check what happened. Huge drop down, right into resistance, right into support, and just as fast as it dropped, it pulled right back up. I kept going.
Well, I guess at that point in time, that hits down there, right? At the lowest spot there. It could just went up and went down and hit that spot again. I guess the safe way to take that trade, it's after the cross and then on the retrace, right?
Correct. That's the absolute safest way. There's sometimes that I might place a trade before the cross, but if you want to be absolutely safe, it is better to wait for the cross for sure. So two things that you want to look for if you see them happening. Sometimes you don't even need to drop anything. Look for the cross, and look for, is it at a point of true support where you're going to get that bounce. If you got a bounce, or if you're approaching true support or true resistance, and there's a cross there at the same time, about 90-95% of the time, there's a trend line. There's a trend line that you can draw in that same area for more confirmation. Almost all the time, it's like they just kind of go in tandem. All right, you're gonna see trend line, and you're gonna see a cross happening. Let me see if I can pull up a cross just to show you. All right, so these are pretty close together, so that might not be the best example. Okay, so here we go. We got 14 over 50. We got a cross there. Obviously, if you're looking at this area here, we can already see right off the bat. We can see the support area here. All right, that's easy. Anybody can pick that up with support right. Okay, right in this zone. See all this consolidation here, and it's over here as well. So we know that's support. So if we know that that is support for sure, and you can see already, see all of this happening there. So much. Come down here, 1, 2, and I will run this right through. Right? Boom. Touches there, right down. The cross happens here. Cross is here. We got the support right after support. Boom. Cross. Now this one is kind of choppy, but the principle still plays out. Okay, as you can see here, right? A lot of choppy movements here, but all in all, after the cross, pull back to the 14, you roll that straight up, still get about 74 pips. Okay, because obviously if you're here, your stop loss, all right, come back, you look for support. So if you're entering here, you can have your support anywhere around here, which is support, resistance. So your risk on this one, all right, bounce back about 30 pips, and you wrote it up. Even though it comes down, it comes here, hasn't reached your entry point, so you're still in profit. It goes back up 85 pips. Actually, if you realize this keeps going, it consolidates across here, but all of this is still profit. All right, a lot of consolidation here. So you might have taken it there, comes back down. When it breaks the 14, which is right here, you jump out. Still got about 60 pips in the bag. All right. So yeah, I mean, either way, once you look for them, man, the trend lines all over that you can apply, and that is what I use, and it gives me a lot more accurate movements. Now, obviously, there are those times that, hey, shit happens. Your market just does some crazy stuff, and things happen unexpectedly or suddenly, and trend lines get broken. And if they get broken, what you want to look for is to retrace back to the trend line, but you might be seeing a reversal of that particular pair, right? Which is similar to what you would have showed me earlier today, Roger, on, when I asked for the analysis on that Euro JPY pair. Breaks it, comes back up, tests, and then goes back down, right? So you spot on, man. Any other questions? Everybody's quiet.
No questions from me. Thanks for the time.
No problem, man. No problem. All right. So real quick, guys. Okay, so we talked about trend lines. I wanted to show you guys the momentum strategy that I spoke about earlier. Let me do that real quick. Now, like I said, this strategy has worked wonders for me, man. And what I like to do with when I'm using this is look for pairs that are not choppy at all. If you've got a pair with a nice clean movement, oh, definitely not this. Definitely not that. So sometimes it takes a while. It's not just a matter of jumping into anything and just buying or selling. You actually want to look for some clean movements. Just going to give you some examples here. I use it on the H1. I love it on the H1. For some reason, I get really good results using the H1 for this particular strategy. Okay. All right, yeah, I can work with this. I mean, we're just working examples either way. So let's say that we're into this period. This is what your CAD, and we got this upward movement here. We're moving down, and we grab the buy. Okay, so just to show you what I look for. Couple things. First, obviously, support and resistance. Boom. Come in here. I'm saying, okay, so got support there. Great. My next thing that I will do, and this is so simple, as it starts to move up, I do this. You guys see what I did?
I do that. Yes, I do that also.
Good. Switch to line chart, man. And the reason for that is line chart removes all of the wicks. All right. When you remove all the wicks, it makes everything look so much better, so much easier to identify. right? In terms of patterns, W patterns, M patterns, and so on. You see this long wick that is here, all right? Remove that. Why do I move that? Is because I want to see the actual pivot points. I want to see the areas where the candles have closed. And I start to do this. Boom. Boom. That's what I'm doing like that. I'm just marking out those zones. I can't put one here because we haven't gotten there yet. We're coming from left to right. All right? So this is what I'm doing. I know there's going to be retracements. Boom. Up, retracement. So let's say that we're going up, Now, persons always ask, so how do I know how far it's going to go to? Or how do I set my take profit zones? Well, this is one way. I'm looking at this. I've got these points here marked off, okay? Once those are marked off, I can easily come back and put it to candle view if I want. But for the most part, this is what I do, just to show you guys. If I'm here, okay, I like to use pending orders for this strategy, okay? So if I'm here and I'm looking at it, I'm saying, well, okay, you know, came down, this starting to go up. So let's say we're right here, just to show you guys. Let's say we're right down here, just for the example. So I'm saying, well, okay, based on where I'm seeing these pivot points from before, this might hit here, and then it might come back down. Okay, let's say that there's no moving averages at all on the screen. Okay, none. Let's say that you never even heard about moving averages ever. Okay, actually, you know what? Just for this, let me actually remove the moving averages, because I used to use this before I even started to use moving averages, and this was the strategy that it was allowing me to do. You know, this is how I made my first $1,000 per day, and allowed me to keep doing that. So no moving averages whatsoever. So I'm here, it's starting to go up, and I've already identified the trend. That's very important. You identify what is the trend of this particular pair. If you know that it's an upward trend, good. You're looking for that. Now check this out. I would come and I'm going to set an pending order. Okay. Oh, come on. All right. I'm going to set a pending order right around there. Reason for that is I know that if it breaks this, okay, the next place it's going to is where? It's to right here. Okay, correct. It's to the next resistance point. Now, if it never breaks it, it comes back down here. Fine, that's okay with me, because you know, if it doesn't trigger it, I don't lose any money. But it breaks it, it triggers it, it's coming to here. Okay. Now, one or two things that I would do. Normally, I open two or three orders on a pair. I either would open two, let one run, and this is my take profit, and leave the other one. And if the other one breaks, then great. Or what I would do, I would set a pending order there, okay, and pending order there. Because I'm saying if it does break out, I'm already in it, okay? And the reason that I do that is because once it breaks this, almost, I don't want to say 100% of the time, but about 95% of the time I have proven, and I can say proven it because, like I said, I used this particular strategy for a long time before I even touched a maze. And to be quite honest with you, I made even more money doing this strategy than I did with the image. All right, just the image.
I read about I read that book Naked Forex, and they teach a strategy like that. And there's a guy on one of the educators on IML that teaches a strategy like that too. But the difference is, like, they say that they wait for the retest of that zone. Did you ever wait for a retest of that zone, or no? Or do you feel like sometimes it doesn't retest at all, just keep going?
To be quite honest, I never did the retesting when I used this strategy. So I'm just showing you a few what worked for me. You know, I mean, there are different ways that different folks might have done it, which is fine. Nothing is wrong with waiting for a retest as well. But here's the thing: if you look at this particular scenario,
yeah,
where did the retest happen? Not until all the way up here. So by that time, if you waited for the retest, All right, check this out. If you got in here, as we
He
said,
never even retested any zones, and that's why I'm asking, because
exactly,
I was trying to take some trades, waiting for the retest, and most of the time the retest didn't happen, and the thing just kept moving. So
correct. You would have lost out on 50 pips waiting for a little retest right there.
yeah,
And not only that, by the time you got in after the retest, right now, obviously in this particular scenario, it did go up. But here's the thing. Remember, we're not seeing any of this as yet. So what if it went to this point here as true resistance, and then it got up here? What if that retest was actually reversal? You see what I'm saying? You would have
well,
just
the retest to retest, you had to break that and come back, and the it's like they say the support becomes the
resistance.
yeah, support becomes, so that one, it never even became resistance. It's just I mean, I'm sorry, that resistance that never became support. It hit it, and it was resistance again, and went down. It was like a new support, and that resistance that never was supported. Just once it broke that, it went straight through again. You know?
Yeah, you would have lost a ton of picks because here's the thing: my retest that I would have looked for. See, from the time I came here and I saw support, 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 support. When this came down, when this hit here, okay, support, I probably would have had a buy in there already either way. It went up here, okay, to this area, back down to my support line. So I know there's another buy that I'm going to be putting in. So check the thing, check it here. I would have actually had 34 pips right there. Now I know this is a previous resistance area because of this point and this point and this point over here. So I know there's also going to be a retest. Now, everybody trades different. Some folks would have said, well, okay, let me just stick it out, stay in, fine. Nothing's wrong with that. You can stay in, lose all those picks, and then wait for it to go up. Me personally, I would have taken profit right there. If I've got more than one position, then I probably would have left the other one to rest. Or I would have take profit there for both, wait for the retest, and then I just enter here. I want to buy at wholesale, not retail. Right? And literally, you know, if I've done that and I've still got my I would have moved my stop loss up, obviously, because if I'm doing that, I've taken it here, I know it's going up in a buy. All right. My thing is my stop loss is gonna be moving with it because I know this is gonna push off. Why do I know that? Because it's a bounce. It's an upward trend. It's already hit, tested, and retested the support line. So I know it's gonna push off. The next thing about it is this. If you look at where this support level is, okay, and this movement from the support to this resistance, because that is just on par with that, that in itself tells me that this is likely to really push up. Now, if it was, say, halfway, something might have told me it probably wouldn't. But when you got a movement in the opposite direction that is just as high as or higher than the previous movement, that is an indication that is likely to continue in that trend direction.
I'm sorry, can you repeat that, please? I got a little lost now.
Okay. Whenever you've got a movement that retraces to the same level, same height as the previous movement, is very likely that it's going to continue in that trend direction. If this movement here had come, say, a quarter of the way or half of the way, that tells me that the volume or the strength of the buyers to push this up was not strong enough to get it back up to this point here. So that tells me that there's already some sort of market exhaustion that is beginning to happen. So I might have been looking for it to come up and probably not have enough strength and then start to dwindle back down. But the fact that I was able to push all the way back up to that previous resistance tells me that the buyers do have. And the only reason it stopped is because it is a resistance point. Hence the retrace. And then the push off. Now, if I waited for another retrace, I would have lost a lot of money.
So that's exactly what happened going down. It went down and then went up and went down and went up, but when it came back down, it wasn't hard enough to go all the way down, and went backwards.
Well, let me show you another thing. Remember what I just said about the strength of the buyers pushing it up to the same level of the previous high?
Yeah.
Now, flip that on its head. When you got this retrace, would you
Yeah,
see,
exactly.
you see what I'm saying? The retrace was just about half or just under half of the previous movement up. You see what I just did? I just flipped that on its head. So now you're looking at that movement back down, but it's not strong enough to go back down here. So that is a sign in itself that, hey, this is going to push up, and this is going to push up pretty heavy, right up to the next support. Now, here's the thing.
That's good to know.
Yep, so keep that in mind. That's something you want to keep in mind. Now, as this is going up, I'm looking to the left. I'm saying, well, I know for a fact, I might not know it's going to go all the way up here, but I know for a fact it's going to go to at least this point. So because I would have put a pending, a buy stop.
Pending order.
Yeah, a buy stop right here triggers me in pips all the way up. That's 18 pips right there. Now, for the time that it breaks it, and here's the thing that I always found. Now, I'm not saying that this is going to happen 100% of the time, but I'm only telling you what I found or what personally happened in my situation over and over and over. Even though it might not necessarily close, so I would be seeing the candle, and the candle has not actually closed as yet. But from the time it breaks it, almost all the time that it breaks it, it keeps going up to the next point. I always found that interesting. Now, you know, with the MA strategy, we say, well, you want to wait for the close of the candle before you make a move. What I personally found was that, let me just switch back to candle over here. From the time this candle goes up and it breaks this point, even before it closes, from the time it breaks that point, it goes straight up. It pushes right up. Check what happens up here again. We got, is a wick, yes, but the fact that it went up to that point and stopped means that that's the point of interest still. Okay? And check what happens. We're right in the same zone. So, next pending order kicks in. From the time that it breaks it, now it's dangerous dealing with the wicks, though. It's dangerous dealing with the wicks. But hey, you would have already bagged your profit either way, so this is all just gravy. All right? Check what happens. It keeps pushing until it reaches at least that point. And then it's just the flip side on the way back down. Same points. Hits here. All right? Check this out. See this? See where that ends? You notice that candle opens up there. And on this point here is when this buy candle actually closes as well. Back to the next support. Everything happens around the support and the resistance areas, and it just moves. Price action, guys. This is without even using a single MA. This is just using only support, horizontal support and resistance line. Not even trend lines. Not even trend lines. I mean, this is breaking it right down to naked. Okay? Basic support, basic resistance, and as soon as it breaks that point, it just runs to the next point, runs to the next point, runs to the next point. And all of those are pips that you're going to bag. Don't worry if you get the little drawback, switch your line and look, and always remember, look at the amount of volume that is put into a pullback. Because if you see, again, we had a major movement up here, major movement, it came down to what? Not exactly half, okay? Well, actually, yeah, just about half. Tested the line, back up, and then all the way down. Because what? It was enough volume. The volume was about just about half of this. If the volume was like a quarter of it, it's likely that this would have come, and instead of pushing all the way down, it would have come here, and then it would have pushed up. Okay? So think of it that way. And that way has always worked for me. Always look at the previous movement. How strong was the volume of the previous movement? Was it strong enough to challenge the first movement? Here's another one. We got movement right here to here. Okay? How much is this? This is about 67 pips. Okay? We got a movement going up here. Clean movement. Okay? But what happens? Okay, this is about 30 pips or so. Right? So 30 and 30 is 60. We said that this is about 67. So it's not even half. So the fact that it's not even half, what happens? Consolidation, it drops. Simple as that may sound, that is extremely powerful. Okay?
Yeah.
So those are things that you can look for, guys. And this strategy has not failed me yet. You know? Obviously.
It's like naked trading.
What's that?
It's like naked trading.
Very naked. Very naked. This is stripping her down to bare ass. This is bare ass trading right here. I mean,
there's a book on that.
Yeah, there is.
Yeah, I've been reading that book.
I got a PDF and I honestly never got a chance to read it. honestly, I got about a couple hundred PDFs, and I probably read
Yeah,
two.
yeah. The book always talk about waiting on the like the kangaroo tails and the retest of the support or resistance before you take the trade. You know,
Right.
simple.
Exactly. Yeah. And
Correct.
they do on the book. And the book, he also he uses like the week time frame and the freaking daily. You know.
Yeah, the weekend, the hour 4 hour time frame. Yeah.
Yeah.
Yeah, it takes too long, man.
Yeah, you see, there's pros and cons. If you use any 4 hour and the 15, I kind of like them still because if you get a movement on the 4 hour, you
It's
know
more
that's a pretty
true.
yeah that's a big movement. Like give an example, you guys who are part of my VIP group, you know that there are days where I will place some trades probably in the morning or probably in the afternoon, and they may be like taking long. You know, like I know on Wednesday I placed some. I got up late, man. I got up late. I hardly did much of London session. I started trading about between 11:30 to 12. So here it is beyond 4 hour. I'm using 4 hour and daily. So you know you've got like a 4 hour candle. You know you're talking 12 to 4. Then at 5 o'clock, you know I hit that period. Freaking fucking devils happy hour. So you've got all kinds of crazy spreads. So here's the thing though. By the end of the day, how much pips did we get? Like 240, right? For that day
Yeah,
alone. So yes, it takes longer, but
there's more
what
pips though.
is a lot more pips, one, and you can be a lot more comfortable because if you place a trade, you know what? Hey, I know this is going to take a couple hours. Hey, shit, you go off and you know, mow the
Yeah,
grass and go out. You do whatever you got to do. You know, so it depends on how you really want to trade. Me personally, I like that, but I still like the 1 hour. And 15 minute is fine if you can find some good setups on the 15. You can still get some pretty good picks on the 15 minute as well. You know, but I have kind of moved towards a bit longer trades that are going to generate big picks. You know, but I mean, to each his own. You know, to each his own. At the end of the day, whether it's a lot of trades and smaller pip amounts, but it adds up versus small, lesser trades and bigger pips. At the end of the day, once we get in money, that's all that matters, man. That's all that matters. But I just really wanted to show you guys. I actually stayed a lot longer than I had planned to, but I just really want to show you guys this particular strategy that I use sometimes or a lot, and this is how I started out. This is my first strategy that I really started to make money with. A day after learning this strategy, like literally the next day, is when I made my first $1,000 in a day.
And you always looking at the 1 hour.
For this strategy, I only use the 1 hour. Yeah,
Good, cool.
yeah.
I'm gonna test it out. Thank you.
Not a problem, man. We're gonna do some more over time, some more trainings. I'm gonna show you guys some more stuff. There's so much, right? But the thing is, you don't want to have too
I'm
much.
sorry. I'm
Looking
sorry
at
to interrupt. One quick question.
Mhm.
What hours do you usually practice that strategy? Still like the beginning of London and stuff?
Um, I got my alarm set for 3:30
So
in the
you
morning.
start applying that around 3:30 in the morning.
Usually, but as of recently, I've been getting up a little bit later because I guess when you get more and more confident in your trading, you know that you're gonna make money either way. So I just say, whatever. I'm just gonna sleep a little longer. so
That's right.
so before when it's like, man, I gotta get it like from the get go to get it. But now, I get up at 10, 11, 12 if I want to and play trades. I know we're gonna bag at least 100 picks for the day. So I don't really worry about it too much.
Hey, is that any way? Is that any way one of these days, like when you're trading, you can jump in the Zoom and trade it live and just show some of the your thought process when you're doing?
Hey, that's actually pretty. Actually, that's something that I had wanted to do for a while, and somehow we just never really got around to doing it. But yeah, I think that would actually be a lot of fun. We just come on Zoom and we just like, okay, guys, so this is what we're looking at, and we're gonna do this, we're gonna do that. I think that's
Yeah,
actually one of the best ways to do training as well, live. You know. So yeah,
yeah. I mean, even one day that you like, you have some time and you see something coming up, say just turn on the Zoom and whoever is in, can
mhm,
participate and watch it, or
right,
or you can just record it. I mean,
yeah.
I know I've been in some live trading sessions too that sometimes nothing can happen.
Right.
But it would be cool just to see what since we can't be next to you when
Right.
you're doing the trade, maybe if you can if you can catch one day that you're doing the trades and
Hmm.
we can follow your thought process, it definitely be helpful, you know.
Okay. Yeah, that sounds like fun. We can do that.
Thank you.
We can do that. We probably start doing that from next week. Um, yeah, probably do that from next week, man, and we start to do a couple of those. That should be interesting.
Awesome.
Yeah. All right. So yeah,
I got,
let's.
I got, I got a question.
Yeah. What's up?
What was your account size when you made your first 1,000? You start
When I
off
made
with a big account.
my first 1,000, I think I probably had about probably a little over $3,000 on my account at that time. Yeah. And I was trading. I was trading at that point. I was doing some, point fives. Because when I first started out, I started with point ones only, and then from there I went up to point threes, and then point fives, and then I started doing the one lots and so on. But as I got better and better, what I realized is it's not even a matter of using big lot size. Some folks think that in order to make big money, you have to use big lot sizes, and I've come to learn that that is just not the case. You just need to trade better. you know,
Yeah.
yeah. If you can catch some good solid trades and good movements with a point three, point three, point five, with a couple trades, you can still knock off $1,000 in a day.
Nice.
Yeah, definitely. I think a lot of folks too are pretty eager. I can tell you, I've blown accounts before because I was too eager. You know, and I'll tell you, my best teacher was losing money. That might sound crazy, but it's true. My best lessons were in losing money. It's only so much money you can lose before you start to realize to yourself, okay, you know what? Maybe I need to change something about what I'm doing.
Yeah.
And hard lesson. I'll give you that. It's a hard lesson, but it was the best lesson. And I found when they start to slow down, just slow it down. Stop trying to base trade. Stop trying to make back what you lost. In half the time, because all that does is cause you to lose more. Because you make hasty decisions and you just go. Sometimes you go like, oh, whatever. Let me just hope for the best. And whenever I see guys saying, hey, I hope that this happens, or I hope that this goes up, I know that they're in trouble.
Like Mike.
Yeah, you're correct. You don't want to start. By the time you start to base your trades on hope, you already lost, man. You're in trouble. Because now you're gambling. Now you're
Yeah.
gambling. I don't mind losing money. If I look at a trade and I say, well, okay, my analysis shows me it's going to do X, Y, or Z. And, I draw my trend lines. I check out my support, my resistance. I do everything that I normally do that wins trades, and the trade goes against me. Yeah, I feel bad that I lost the money, but I don't feel as bad because I know it's not due to my analysis being not sound. You know what I mean? The analysis was good, just that sometimes things happen in the market that cause trades to flip on you. And not only that, everybody gets it wrong sometimes. Professionals get it wrong.
Mm.
That's kind of what happened to GU, no?
Exactly. Exactly. I mean, when you see, guys like James that lose, you know, thousands of dollars and draw down, obviously he's got the account to handle that. But it
No, I
tells
mean
you
the
even
call that you did on GU, I did it on demo, so I didn't put a stop loss, and I think it hit the stop loss, but he went exactly the way we're supposed to go, you know.
right. That can happen. That can happen, man. So you win some, you lose some. You just want to win more than you lose at the end of the day. You know what I mean? That's what it's about.
But that's another thing too. Like you said, you don't trade on Thursday. That was a call made on Thursday too, so that has something to play with.
Yeah, I don't trade on Thursdays. On Thursdays, Trump always says some shit that just messes with the market.
There's a lot of news on the euro and a lot of a lot of different impact folders on the euro and on the GBP too
Yep.
on Thursday. And all it is like news on Europe's every freaking Thursday is all night long.
Yeah, I just take Thursdays off and just relax, man. And then you gotta remember to then Friday's a funny day too, because don't forget Friday, you got some things against you. One, the market is gonna close early. So if you got trades that you don't want to hold over the weekend, you got till 4 o'clock or probably 5 depending on your time zone, and to get those trades in profit and close. One, and then two, because it is Friday, you're gonna have a lot of folks dumping trades, dumping stock. So there's gonna be a lot of sudden things that can happen on Fridays as well. So Fridays is really a tricky day as well. I know some guys that don't trade on Thursdays or Fridays. Period. You know. So, but it is what it is. You know. I look forward to more. Get some last minute picks. I find that Fridays is usually a good day for me. Some folks say that it's not for them. I get good picks on Fridays. You know, I'm hoping we get some good ones tomorrow. We'll see what happens.
So, what time are we going to sleep right now?
That depends on my girlfriend.
Okay, so let's change the question. What time most likely you be going to be getting up to trade today?
I probably get up about 4.
4.
Yeah, probably get up at 4. About
And
4.
what time is it right
4 to
now for
5.
you then?
Right now is about 10:35 right now.
Oh, same time as me then. Okay.
Yeah. Probably get up about 4. The alarm is set for 3:30, but I'm probably gonna put on a mute. I'll just let my body wake me up. Just get about 4. Might be 5. You know. When I get a whole message you guys in the group though, and just let you know I'm up. Let's go.
All right, cool.
All right, guys. So thanks for coming on. Again, we went a lot longer than I planned, but hey, good conversation either way, man.
I appreciate
Caviar,
it, Tom.
thanks for coming
Thank
on,
you.
man.
Yeah,
Caviar,
man. Appreciate that, man.
yeah, not a problem, not a problem. All right, guys. So hit you guys up otherwise in the chat group.
All right, talk to you soon. Have a good night.
All right, have a good night, man. Bye bye.